8:24, we're here with Caroline Batista from H&R Block. Always look forward to having you on the BT couch. So full of information. Welcome.
Thanks.
And we are talking, of course, the deadline's coming. It's March 2nd, right?
Absolutely. Midnight.
Midnight, March 2nd. And some people find it very confusing to understand exactly what happens with an RRSP, a Registered Retirement Savings Plan. Give us the little Coles notes.
Well, the idea is if you put money into your RRSP now, you can defer the taxes until you retire and take the money out then. So in essence, it's a retirement savings plan so that Canadians have money to retire from.
So if you make, I don't know, $50,000 a year and you put $5,000 into your RRSP before the deadline, then you're reporting to the government that you are going to be taxed on $45,000. Is that generally?
Absolutely. It's a deduction off of your taxable income.
Right.
So you're saving money. Presumably, at this point in time, you're earning more than you will in retirement.
Right.
So you can defer and pay the taxes when you're withdrawing money in a lower tax bracket.
Lower tax bracket.
Yeah.
So it's a little bit of a safety net for some. If you need that money, you can take it out, but you will be taxed at your current taxation rate.
Yeah.
So you want to leave it in there. And why do we want to start our RRSPs as young as possible?
We do want to do that, and that's the bottom line is it's because of the value of compound interest and compounding your money. So the longer you save your money, the more time it has to grow. And the numbers on that are right there. The numbers on that are really interesting. If you look at this here, so one person starts at 25. They put away $100 a month for 10 years,
yeah.
So they've saved $12,000.
Okay.
The other person, you know, they get their first job, they decide to travel, buy a fancy car. They don't start saving till they're 40, and they save for 20 years. So in essence, they're putting aside twice as much money.
Right. So student B is going to have more money in there, right?
Well, you would think so, because they've put aside twice as much money.
I think there's a twist to this. Let's go to the next board and tell us. Okay.
There is a twist, and here it is. Look at that. Student A has $73,000 by the time they reach 60. The other one, what do they have? They have
48.
Yeah.
Unbelievable difference. Okay, so the longer the savings sits in the account, the greater the interest, because the interest grows later in years. Is that what compound interest means?
Compound is interest on your interest, right? So every year it's in there. So, you know, the first year you're getting interest on $10, the next year it's on $11, the next year and so it's growing on top of itself. And I find that graphic really great, especially when I'm speaking to young people, because you sort of think, you know, what is $100 a month now, right? A latte a day?
Yeah, or even if it's $50 a month, you start somewhere.
Start somewhere and start now.
Start now. So the people that are sitting there going, okay, I'm going to start now. How do I find out how much contribution room I have in my RRSP? Where do you get that information?
That information would be on your notice of assessment from your last year's tax return, or if you have set up a My Account with the CRA. So you can set up it's called a My Account, and you can set it up on CRA to get a lot of information from there. It is good to note, though, that it's not something you can do quickly. You need to apply online. They'll mail you a code, you know, for privacy and security,
yes,
absolutely.
Yes.
And then you go back. So it's not like you could look it up on the 28th of February and find out your contribution room. You'd need to start that now.
Very common question when it comes to RRSPs, is it a good idea to take out a loan to contribute?
It depends on your financial situation. Absolutely. The more money you can put in, the more money you'll have at retirement, and the more money you'll get back on your taxes.
And then you take that refund from your taxes and you pay off the loan. You don't go to Mexico.
Yes, that's the key.
Right.
Absolutely. That is the key.
Caroline Batista, always good to have you here. H&R Block, a great resource for you. hrblock.ca is the website. I'm sure we'll talk to you again very soon. Tax season definitely around the corner.